isn't just business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Asian markets opened with a positive bias after a drop in the yen as well as a gain in US equities. The government has granted the logistics sector infrastructure status, allowing companies to borrow larger sums for a longer period. Nobel laureate Muhammad Yunus tells Bloomberg Quint that forceful financial inclusion is not the best idea. And German Chancellor Angela Merkel has said that she would rather face elections than govern a country without a majority. Let's turn to the international markets now, and US stocks ended higher on Monday as Wall Street bet tax cuts would keep the economic expansion going. The Dow Jones gained 0.31%, while the wider S&P 500 ended up 0.13%. Gains in consumer discretionary and industrial names offset continued underperformance in the energy sector. The S&P 500 index climbed after 2 weeks of losses, though it gave up some of the gains in late in the session on reports that the US is poised to sue to block AT&T's proposed takeover of Time Warner. The bid to create a media Goliath was dealt a stunning blow on Monday as the government filed an antitrust lawsuit to stop the deal, claiming their combined market power would lead to higher prices for consumers. Let's look at the Asian markets as well now, and Asian markets opened positive, taking cues from US equities. The Japanese Nikkei was leading gains. It was up almost 1.2% in early trade, but it has now lost some of that ground. It's currently up about 0.9%. And let's turn to the Indian markets now, and Darshan Mehta and Agam Vakil are here as usual to set us up for the day's trade and also to tell us what's happened in the futures and options space. Darshan, first to you, what are you picking up today?
Good morning, Alex. And as yesterday, the SGX Nifty seems to have given up the opening gains because it was up almost 30 points almost an hour ago. It's come down to just 7 points, but still above the 10,300 mark in trade. So I expect a flattish opening as far as our markets are concerned. As far as some of the ADRs are concerned, ICICI Bank was down almost close to 3%. Dr. Reddy's was also rather weak. It was down close to 2%. Even in India, Dr. Reddy was weak. And Vedanta ended up almost 1.4% higher. Commodities as a pack seems to be doing well. As far as the commodity pack is concerned, crude dropped almost 0.8% in overnight trade. Currently, it's trading with a positive bias. The opening trades again because the US stockpile data that came out by the government, by the US government, indicating that now after gaining significantly, they are on a declining trend. So that is why crude came off. Base metals ended weak, ended actually mixed on the LME. So copper, nickel were up almost 0.7%. Lead was the biggest gainer. It was up almost 1%. What didn't do well was aluminium and zinc. They fell in anywhere between 0.8% to 0.5%. Even as far as China is concerned, copper has opened weaker, up almost close to, has opened stronger, up 1%. Steel has opened up 1%. But the other base metals are not doing extremely well. Aluminium is down almost 1.5%. Rubber is down almost 0.2%. So that's the general trend that you're getting as far as commodities is concerned. Gold fell almost 1.2% overnight, but currently in morning trade, it's trading with a positive bias. As far as flows are concerned, FIs were net sellers to the tune of almost 360 crores in the cash market. DIs were net buyers to the tune of almost 613 crores in the cash market. So this is the actual figure that came out, and almost 16,000 crores of net buying has already happened by FIs in the cash market this month, and DIs have bought in another 5,000 crores in the cash market. So that's the general trend that we're seeing currently. As far as what the sectors did extremely well, some of them, IT and PSU banks were trading rather weak on Monday. What did well was the energy stocks, was the metal stocks, were the real estate stocks. So they managed to rally significantly. As far as the Nifty is concerned, we were up just 15 points. Reliance led the rally, and a big Goldman Sachs target price change has come in on Reliance. The banks did extremely well, so it was contributed by the private banks. What didn't do well was Infosys continues to trade weak, HDFC continues to trade weak, but a flattish close. Agam, what's the FNO scene like? And 13 FNO stocks in the ban, that's interesting.
Right, I know. Well, you know, again, Darshan, because we're still hanging around the 10,300 mark, at least as far as the benchmark indices are concerned, we're looking at further consolidation, and we've seen very little change in open interest when it comes to the futures too. In terms of the Nifty bank futures, again, not too much to speak for when it comes to this movement on the index, however, a percent addition towards open interest. But when it comes to the WIX, again, still hanging around between the same marks. So the India Volatility Index hasn't moved too much either. It's down 2%, but still hanging between 13 and 14 for now. And with that, the put-call ratio predictably hasn't moved either, suddenly standing at around 1.23. In terms of changes in open interest, there will be some more indications of consolidation, and we're looking at maximum open interest between 10,200 and 10,500, which gives us a broad range as we move into the next few days in terms of session. But that said, we are looking at plenty of changes in the band. So Just Dial and TV18 enter the band, and as Darshan was suggesting, now that makes the total from 11 to 13. So we will be watching out for a lot of these stocks which are in the band. But Tata Power has seen about a near 14% addition in open interest towards longs, and among the other counters, we're also keeping an eye on Voltas. In fact, a lot of these relatively smaller Tata Group companies have done very well, and we have seen good amount of longs building in, so we'll be watching out for those group companies and of course the benchmark indices as well.
Right, thanks for that. Let's take a check on the rupee and the bond market now, and Saloni Dhanuka joins in now. Saloni, particularly on the bond market, the 16 basis point fall in the yields, that was significant yesterday, the largest drop in a year.
Absolutely, Alex. The 10-year yield ended 16 basis point lower at 6.89% yesterday, its biggest drop since November 2016. Now the yields dropped after RBI scrapped plans to sell bonds worth rupees 10,000 crore via open market operations. Now RBI's move came after Moody investors raised India's rating and changed the outlook from stable to positive, and also global funds reduced their rupee bond holdings yesterday by approximately 80 crores according to NSDL data. While moving to currency market, the rupee weakened by 10 paise to end at 65.11 against the dollar due to renewed dollar demand from the importers. Now a sudden rebound in global crude prices after its 2-day fall also added some pressure for the home currency. However, abundant capital inflows largely supported the rupee throughout the day. Talking about inflows, FPIs have invested approximately 14,000 crore rupees so far in this November. Dollar rupee is trading flat in the non-deliverable forward market. Now on the global front, dollar index is trading near 1-week high of 94.10 levels, and all eyes will be on Fed Chair speech which is scheduled for tomorrow, and also FOMC minutes which is scheduled this week. It will remain a key watch for all the global currency pairs, Alex.
Thanks for that, Saloni. Let's move to the commodities market now, and Jayesh Khilani has all the details in that market. Jayesh.
Morning, Alex. Let me start off with oil prices, which actually closed lower after a gain of about 2.5% on Friday. Now, a couple of reasons for the softness in oil prices. One is that there are news reports of some political instability arising in Germany, and also that UAE is now seeing logic in the OPEC extending oil output cuts. So mixed cues coming in over there. BlackRock on the back of this has made a comment, and I quote, "Oil's bull run seen moderating as OPEC meeting looms." We'll be closely watching out for that meeting and the outcome. We'll stay on top of that. Moving on to the precious metal space, all of the precious metals in fact declined. Gold saw a cut of more than 1% overnight, as backed by the dollar, which actually saw the first advance in about 5 sessions. Moving on to base metals, we got some mixed cues coming in from the LME exchange. Aluminium and copper declined, while lead, copper and nickel advanced. Now aluminium is near a 3-month low on the output reforms that China is on China output reports, and the LME copper inventory fell as much as 2.5%, and we are seeing similar cues come in from the Shanghai Futures Exchange as well.
Thanks, Jayesh, for that. On to the stock of the day. MIRC Electronics reported a stellar September quarter. The company reported the third straight quarter of profits. Let's go across to Nikki Mirchandani for more details.
Good set of numbers coming in from MIRC Electronics. If you look at the revenues, that's shot up by as much as 39% in this quarter at a figure of around 200 odd crore as compared to a figure of 144 crore seen in the corresponding quarter. Net profit has come in at 12 crore as compared to a loss of nearly 9.9 crore. EBITDA for that matter, that's risen multifold to 20.8 crore as compared to a figure of nearly 7.3 crore in the corresponding quarter. Margins have expanded almost double to 10.3 as compared to 5% that we saw in the corresponding quarter. So what goes behind the making of these numbers? Well, good revenue and an operational performance. A good operational performance coming in from the company has led to a good bottom line performance. Now, employee expenses as a part of your net sales, they have come down to 9% from 12% earlier. Also, other income, there is a sharp jump which is registered in other income, which has almost risen threefold to roughly around half odd crore as compared to a number of 0.17 crore in the corresponding quarter. Depreciation has declined. Finance cost has come down by as much as 9 and 26% respectively. Also, we need to remember that the company incurred an exceptional expense in the base quarter at a figure of nearly 9.63 crore, which is absent in this quarter. These expenses relate to your additional compensation cost. Just to give you a little background about what the company is, well, they are the makers of Onida brand and have a market capitalization of around 722 crore. And also the primary segment that it operates is consumer durables. Shareholding pattern, promoter hold 58%, while the public holding stands at 42%. And in an exclusive development for the company, which is reported on ET, it says that MIRC Electronics is open to sell its business if it gets all the business and the plans if it gets a decent valuation, though promoter are not really looking for the sale, but if it gets a PE investor which offers a valuation of nearly 5 to 6 times, then it might just be interested in selling. And also the company wants to take place the position which has been vacated by Videocon for that matter. So we need to keep an eye out on the stock for some reaction out there, Alex.
Right, Nikki, we'll take care of that. But let's move on to the big update from the logistics sector. And a long-standing demand has been granted by the government. They've received infrastructure status. Now, how does it affect the companies? To give you the answers to all of those questions, Soumit Sarkar is right here. Soumit, over to you.
Good morning, Alex. Now, the government has now changed the transport category to transport and logistics category and has included logistic infrastructure as an infrastructure subsector in the list. Now, transport and logistics include roads, bridges, ports, shipyards, inland waterways, airport, railway tracks, etc. Urban public transport is also included in is also a part of this, but what is new and what has come in new is this logistics infrastructure. So what does that include? Logistic infrastructure means and includes multimodal logistic park in comprising of inland container depot with a minimum investment of 50 crore rupees and a minimum area of 10 acre. Cold chain facility with a minimum investment of 15 crore and a minimum area of 20,000 square feet, and warehousing facility with a minimum investment of 25 crore rupees and a minimum area of 1 lakh square feet. How does the sector benefit from this? Now, the sector is now likely to attract more funds at competitive rates. Having an infrastructure status would also help the logistics sector get credit at marginally lower interest rate and on a long-term basis. Now, this will also give the sector access to large amount of funds through external commercial borrowings and could also attract large debt and pension funds to invest in the sector. This will also reduce the developers' cost of borrowing. Now, why this move was needed? Now, logistic cost currently in India is very high. India spends around 13% of the GDP on logistics according to a McKinsey report, which is more than what US and Germany spend. Now, US spends around 9.5% on GDP, 9.5% as logistic cost as a percentage of GDP, while Germany spends around 8% of GDP on logistic. Now, as logistic cost in India is high, Indian goods become less competitive in the global market, and thus this move will reduce the cost of these goods and make them more competitive in the global market. So, what are the companies that benefit from this? There are a bunch of companies, but to name few, they would include TCI Express, Noman Logistics, Mahindra Logistics, All Cargo Logistics, Blue Dart Express, and Container Corp.
Right. Clearly, Somit, those are the stocks that we have to watch out for in today's session. But let's look at some of the other stocks in news. To give you a list, Shraddha Babla is here. Shraddha, what's on your list today?
Well, to start off with L&T Finance, where Bain Capital is looking to sell 3.9 crore shares or about 2.15% stake, and Citi is going to be underwriting that deal. Now, they're looking to raise about $109 million, and the offer price has been set at 180.5 to 188. That indicates a discount of up to 4% to yesterday's closing price for L&T Finance. So some negative reaction could be seen there. You also have Quest Corp, which will be buying 51% stake in Tata Business Support Services, and that will be for a consideration of 153 crores. Now, this is a subsidiary of Tata Sons and provides customer lifecycle management and business process management. It had reported revenues of 661 crores in FY17, and that implies implies a trailing sales multiple of 0.5. So seems like a decent price at which they have acquired this company. You also have a ET report which suggests that Infibeam is in talks to sell its minority stake to Fairfax Financial Holdings. You have two order wins. One is Simplex Infra, which has received an order worth 524 crores from NBCC, and you also have the smaller ARSS Infra, which has won orders worth about 87 crores. And lastly, on the back of bulk deals, we're tracking a small edible oil company which is called BCL Industries. It has a market cap of just about 155 crores. Purinju Veliath bought 2 lakh shares yesterday under a bulk deal, so keep an eye out on that name. And also Mercator, where Nomura has bought 41.2 lakh shares yesterday. So all of these to watch out for, Alex.
Thanks, Shraddha, for that. Now, over to a Bloomberg Quint story. 8 firms linked to India's largest conglomerate, Tata Group, the richest man, Mukesh Ambani's Reliance Industries, and the biggest bank, that's State Bank of India, are among more than 2 lakh companies that have been struck off by the government after its crackdown on suspected shell companies. Now, what are these companies and why were they struck off? Nikunjori sums it up in this report.
8 non-existent companies linked with India's largest business houses like Reliance Industries, Tata Sons and State Bank of India featured in a list of companies that were recently struck off by the Ministry of Corporate Affairs. One of the 8 companies that was struck off by the ROC Mumbai was Reliance Logistics Private Limited, a subsidiary of RIL, which was merged with Ahmedabad-based Vimal Fabrics in 2003. This company's headquarters was changed from Ahmedabad to Mumbai, and the company was again renamed to Reliance Logistics Private Limited, as per information shared by an RIL executive. Now, Bloomberg Quint couldn't independently verify all this information, as ROC's website wasn't updated with all this information. A Reliance spokesperson told Bloomberg Quint that as ROC's records were not updated, a notice for striking off a company's subsidiary was served to the company, and the company has taken up this matter with ROC and will address this issue. Another company owned by Tata Group, Tata Finlay, was renamed to Tata Tea Limited in 1983 and was rechristened to Tata Global Beverages in 2010. This company, after it was renamed to Tata Tea Limited, its registered office was moved from Mumbai to West Bengal. That means that it no longer came under the jurisdiction of ROC Mumbai, which struck off the company's name from the register of companies.
Now, Telecom Secretary Aruna Sundara Rajan, responding to concerns about jobs being lost in the telecom industry due to consolidation, says that while job cuts are happening at the higher managerial levels, there are many more being created at the grassroots. Speaking to Bloomberg Quint's Arpan Chaturvedi, she says that the government is on its way to achieve its target of connecting 100 million rural Indian citizens to the internet. Here's a slice of that conversation.
By the end of December 2018, we expect that about 100 million villages, 100 million Indians, rural Indians, will start getting internet in on their mobiles or on their homes. So all the 4 big telecom service providers, Reliance Jio, Airtel, Voda Idea and BSNL have already made their commitments to the minister last week. So we expect to see the rollout of services start, immediately.
And on the industry front, ma'am, there were a lot of comments in the past that we saw on the industry's health concern, and subsequently an IMG was set up. I believe there's some work still left before the recommendations are given to the cabinet for final approval.
Yes.
What exactly are some of the work left on that recommendation front and discussions, if you can give us an idea on that?
Yeah. So the IMG had given its recommendations, and this was considered by the Telecom Commission almost a month or so back. But there were a couple of clarifications which the Telecom Commission had wanted, and this was on some of the legal implications of the recommendations given. And so for these, we have already referred it to TRAI. And one of the important recommendations on this is, the spectrum caps. Right now, there is a cap on the maximum amount of spectrum that an operator can hold. And so some of the operators had said that, give us some relaxation on the caps so that we can then either, sell that spectrum to somebody or make use of it. So that is the aspect on which we are awaiting the recommendations of the TRAI.
And the second question, you've also talked about the consolidation that's happening in the industry, but one of the effects of that has been these news about job losses in certain companies. Do you think that is a matter of concern for you, or what's your opinion on this topic as far as you're concerned?
See, the telecom sector is undergoing some churn. It's undergoing consolidation. But don't forget that it is undergoing huge expansion, first of all. The mobile tower infrastructure in the country has been doubled in the last 3 years. The optic fiber infrastructure, we have added 30% additional optic fiber in the last 3 years. And I mentioned to you that we're also going to be having almost 1 million Wi-Fi hotspots. Now, all of this is also creating huge amount of jobs at the grassroots level. So what we are reading about is the loss of management sector jobs. But what we are not gaining sight of is the huge job creation that's happening at the ground level.
The Telecom Secretary there, but Somit's back with the big brokerage calls of the day. Somit, what do you have for us?
So on brokerages, first we have is Goldman Sachs on Reliance Industries. Now they have maintained their buy rating but have hiked the target price to 1,205 from 960. Now when it comes to Asia, according to Goldman Sachs, Reliance Industries is the best large cap downstream company. They are also expecting the company's EBITDA to double to $14 billion by FY20 from current $7 billion. Now volume-led growth with capex completion, refining margins, growth in refining margins and positive contribution expected to come in from the telecom business are the positives when it comes to Reliance Industries. Now going forward, they're expecting the petrochemical to be the key growth driver on the back of volume growth, and they're expecting the refining margins earnings to remain stable. They're also expecting Jio to start contributing positively from financial year 2019, and they're expecting the company Reliance Jio's EBITDA to cross over $5 billion by financial year 2025. Now they're saying that the core business of Reliance Industries is now currently trading at an unjustified discount to peers. Now, and they're also expecting the company's free cash flow to turn positive after 5 years with a yield of 6% by financial year 2019. Second, we have is Bob Caps on Somani Ceramics. Now they have initiated coverage with a buy rating and a target price of 975, which suggests a potential upside of 15%. Now, Somani Ceramics is the third largest organized tile manufacturer in India with a market share of around 15%. Now, cut in GST rate from 28% to 18%, expanded value-added portfolio, and the company's focus on fast-growing Tier 2 and Tier 3 cities are the positive for the company. Now, they are expecting the company's revenue and net profit to grow at a compounded annual growth rate of 12% and 23% over FY17 to FY20. Also, they are saying that the company's foray into sanitary ware and allied products will boost the company's margins, and asset-led business model will expand the company's return ratio to 21% by financial year 2020 from current 19% in financial year 2017.
Right. Thanks for that, Somit. Let's move on now. And Nobel laureate and founder of Grameen Bank, Mohammad Yunus, believes in the power of social business and not financial inclusion. In a conversation with Bloomberg Quint's Tamanna Inamdar, he said that forcing financial inclusion will not work. Here's a slice of that conversation.
The social business is designed to solve problems. If people are in distress, if people cannot do something, do in a business relationship, maintain the business relationship, then something wrong with your design of that business, because social business has to come in a business way. So it's a question of how elaborately you have designed that. For example, just to give you a few examples, income in bank, if somebody is unable to pay for crisis, we are always in crisis in Bangladesh because of the floods. Every other year there's a terrible flood nationwide. Sometimes one part of the country is under flood. Nobody has mentioned that. It comes and goes. But people suffer. People lose everything in that particular. So we have a disaster policy in the bank. That the moment any flood in anywhere happens, the manager of the branch manager declares an emergency situation, disaster situation. And once he declares a disaster situation, his immediate job is to save people, use bank's money. So you can use bank money to save people, to take them to a safe place, to dry place, feed them, take care of them, everything out of the money. So this is built in, so you don't abandon them because they own this bank and they would have to do that. And then we go on, once flood recedes, our first job is to make them stand on their feet. Even they can earn 25 paisa a day, help them to earn that 25 paisa so that they start building their confidence to do that. You issue fresh loans for them. And when they go back, make sure whatever damages is done, it's a separate issue, we'll pack it up for a future repayment. It's a long-term loan, don't worry about this now. Get started right now. Right now they need the money, they have to be financed so that they can start. As soon as you can start, they can stand on their feet. As we keep telling them, if people stand on the feet, then Grameen Bank can stand on the feet. If people cannot stand on the feet, Grameen Bank is over. You don't have any meaning for that anymore, because if you don't get the cycles of businesses and doing things, what is the bank doing for? So this is the end of it. So we built everything like that. When a woman dies, or one of our borrower dies, whatever loan she owns is waived completely, right away. It's built in. You know that no family member will be responsible to pay back. So that's the end of it. We create pension funds so that when they go old, cannot work anymore, so that you can sustain yourself out of the pension fund. You create it. It's not somebody gave it to you. You create over the years a fund which will be enough, will generate income for you, so that every month you get income out of the fund that you created yourself.
That's probably a very different way of doing banking than you've probably heard of. But here are a few stories that you should consider reading on the website bloombergquint.com. First up, the top 3 Indian metros, Mumbai, Delhi and Bengaluru, aren't attractive for real estate investors. That's because demonetization and the GST rollout have created liquidity issues for the real estate sector, impacting investment and development opportunities in the area. That's according to a PwC report. President Donald Trump has said that he will designate North Korea a state sponsor of terrorism, subjecting the regime to additional sanctions and reinforcing its status as an international pariah. It isn't really a shift in stance, though, as North Korea is already finding itself increasingly isolated. That announcement is expected later today. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Do stay tuned. This is Bloomberg Quint.
Are we live?